This is Thinking Byzantine, and today we will be analyzing Palantir, ticker symbol PLTR. Now here's for a quick disclaimer. I'm not a financial advisor and I'm just expressing my own opinions. And please subscribe for more content like this. Now here are some stats and facts about Palantir. It had a previous close of 29.05, a 52-week high of 33.5, a 52-week low of 8.9, a current market cap of 48.18 billion. There's no dividend. It was founded in 2003 and IPO'd this September. Palantir has a lockup period and it has never reported a profit. Its current shares outstanding is 1.727 billion shares. And since it has not reported a profit, we cannot calculate a PE ratio, since you need positive earnings for a PE ratio. Now let's see what they do. According to them, they say, we're focused on creating the world's best user experience for working with data. One that empowers people to ask and answer complex questions without requiring them to master query languages, statistical modelings, or the command line. To achieve this, we build platforms for integrating, managing, and securing data, on top of which we layer applications for fully interactive human-driven machine assisting analysis. In summary, Palantir is a data consulting company that helps companies with large complex data sets answer questions by providing software and services. Now here are some recent news. Centrion, the famous short seller, has released a report setting a price target for Palantir at $20. This has led to a small sell-off on Friday. BlackRock recently disclosed a $278.34 million stake in Palantir, and around 3 weeks ago, the United Kingdom has been talking with Palantir to help manage the coronavirus outbreak using data. Links to all these articles will be in the description. Now let's look at their most recent earnings. So they reported a 52 year-over-year growth in revenue compared to from Q3 2019, from 190 million to 289 million in Q3 2020. This has increased their guidance to $1.07 billion. Their net loss has increased though from -0.24 to -0.94. Most of these losses came from the stock-based compensation. So really, I don't think the real losses are $0.94 or 94 cents per share. And the current ratio is 2.54, up from 1.1 from December 31st, 2019, which means they have been increasing their assets compared to their liabilities. Now, here's my bull thesis using the data and information I was able to find. Data is important as ever, and companies and government agencies want data interpreted as fast as possible, leading them to partner with Palantir, such as Airbus. Palantir has unique products that create a moat in the present. Palantir can be used with coronavirus and medical research. So far, it shows strong year-over-year revenue growth. And if we look at the balance sheet, you'll see that Palantir increased in its assets and lowered its liabilities from last year. Now here's the bear thesis. In the short term, the increase in spike does not justify its market cap. And you'll see that later. The end of the lockup period may lead to selling pressure in the short term, as insiders may want to take profits. There's a lot of controversy surrounding this company, which leads to a loss of goodwill and a willingness of companies and individuals to work with Palantir, therefore restricting its future growth potential in the private sector. And this is also important because some individuals may find working with Palantir as unethical. The top 20 customers account for over 50% of the company's revenue, and over 50% of the company's revenue is in government contracts, which means they're a bit top-heavy. If one of those customers leaves Palantir, they'll take a significant hit in revenue. In the long term, AI will challenge Palantir as AI are created to interpret and answer questions regarding data. Now let's look at an evaluation of Palantir based on the numbers. And we will be using price to sales ratio instead of PDE with it, and we'll compare it to its competitors to come up with an answer. So PDE is not PDE. Price to sales ratio is calculated by the price of a share divided by its sales per share, so revenue per share. And Palantir's P to S ratio is 45.6. AYX is P to S is 17.58, and Salesforce with Tableau is 11.38. Now let's give Palantir a small premium, as we're justifying Palantir as a premier growth stock that's growing rapidly compared to its peers, so we'll give it a 1.25 multiplier compared to Alteryx PES ratio, and then we come up with a Palantir's fair price, or fair value, of 13.62, which is significantly lower than its current price, meaning that Palantir is overvalued as of this instant. And as you can see from this chart, you see that probably buying Palantir before early November and October would have been prime time to buy Palantir, because as of now, Palantir has skyrocketed through the roof. And now let's look at Palantir based on my thesis. So far, I am cautiously bullish long term. I say cautiously because it's highly volatile in the short term, and the fact that there are some controversy around this company which may slow down its growth. Plus, I am bullish on AI in the long term, and AI may hurt Palantir in the long term as well. But I'm still bullish on this company. And you should always keep evaluating your thesis, my thesis, before red or green flags for this investment, to pull out or to go in. And now, if you saw the cover of this video, is it a buy? For me, as of now, maybe? Yes, it's hard, because there's a lot of hype surrounding the stock, which means there's a lot of momentum, bullish momentum in the short term. And even if it does correct, it may never go down to its fair value. So I think the correct play that I will try is maybe selling a cash covered put on this. But that's on you guys to decide. Like and subscribe for more content like this.